welcome to this latest Aubrey update, which today focuses on our Aubrey Global Conviction Fund. My name is Simon Pinner. I'm delighted today to be joined by my colleague, Andrew Dalrymple. Andrew is founder, director, and CIO at Aubrey, as well as being the lead investment manager of the Global Emerging Markets and Global Equity Strategies. I'm pleased to report that as we move along 2025, the fund has continued to perform strongly. And where better place than to start this update with a look at the drivers behind that performance. Andrew, over to you.
Yeah, thanks, Simon. I mean, it's been actually a much easier year than many people would suggest. I mean, as you kindly said, the fund is up 10.2% at the end of June, which compares pretty well with an MSCI All Countries World Index gain of 0.5. And of course, we've had a huge headwind with the weakness of the dollar, which is really very pleasing. And I mean, actually, we haven't done a huge amount in terms of changing the asset allocation this year at all. We started the year probably with about 70% in America. We've currently got 60% there. We've increased Europe slightly, but we resisted the enthusiasm that everybody had for sweeping out of America into Europe, saying this was Europe's day. I mean, we'd always find it slightly difficult to find better European ideas than our American holdings. And we have also pushed up our emerging market weighting in the first 6 months of the year. We probably started at about 15% at the start of the year. It's now 25% or thereabouts.
I'm just going to circle back on something there. You mentioned the US, and I'm sure a lot of the viewers today will agree with me when I say we've had a lot of chat and discussion about the end of this so-called US exceptionalism. What are your thoughts on this as we head into the second half of the year?
Well, I just find it, I mean, just take a step back, really. I mean, I've been going to America now more or less for twice a year for 20 years, a bit more now, actually. And every time you come back, you feel slightly more positive about your investment prospects, because it is a great place for finding innovative, hardworking people with a lot of risk capital available. And of course, they've got this huge domestic market of 300 million people who sort of think the same way, do the same things, and are comparatively very rich. And that huge domestic market gives them an enormous springboard to do things internationally as well. And if you think about it, pretty much everything that we take for granted and use on a daily basis has come from America or been invented in America. And so, you can so often come back from a trip to America having found companies that are capitalized at 20 or 30 billion, which you'd never heard of before, despite the fact you've been there multiple times on investment business. I mean, we've had some great winners in America too. I mean, Netflix is up 42%, I think, and Spotify is up 66%. And we've had very little in the big seven, but even for the last 18 months, I think all of last year, our average in the big seven, the Magnificent Seven, was only about 11%. And despite that, we still generated 44% return. So, you don't have to be in these huge index giants just to keep up or beat the index.
So again, if I just continue with that theme closer to home, so to speak, how big a role does Europe actually play in the fund at the moment?
Well, I think it's within decimal places. It's about 15% of the fund. We've got 5 holdings, and I have to say they've performed extremely well this year. I mean, the best performing stock in the portfolio has been Rheinmetall, which we've owned now for a year. They make very superior armored vehicles and a lot of ammunition, and we all know what that's being used for increasingly. We bought it in March last year. It already doubled, and so we did say with some trepidation, but it was still only on 20 times earnings, and it's still on about 27, 28 times earnings or thereabouts, I think now. And we've taken more money out of it than we ever put in. It's a 3% holding in the fund. We also bought very early in the year a company called Fusion Group, which makes electronic price tags for supermarkets. And that has been a very fine performer. They got a very good contract not long ago with the co-op, and they won 1 or 2 others along the way, and it's up 42% year to date. We're not feeling sort of hard done by in Europe at all, but very much the opposite. But it's just that have they done better than our American holdings? Not really. No, not at the moment.
And I guess looking further afield, I'm going to ask you the same question on a country that comes up a lot in discussions that we have with clients and prospects, and that is China.
Yeah.
And your current thinking there and that of the team.
I mean, one of the problems we had with the fund with our really bad year in 2022 was staying too long at the party in China. I mean, as a background, we'd made a huge amount of money there between 2015 and 2021. Of course, China continued with their lockdown just far, far longer and much more protracted or much harsher version than anywhere in the West. And the thing is, when a country comes out of a lockdown like that, and animal spirits we thought would be restored, then we thought we sort of had to be there for that moment, and it kept on being prolonged and prolonged, and the market just dribbled away and died on us. And then when they finally did unlock, then of course the property crash had amplified itself over the preceding 18 months, and animal spirits in China are pretty much, well, I wouldn't say quite crushed, but they're very, very low. And actually, even, I mean, now it would be nice to think that things are improving, but they're not really. Regrettably, we like to think they are. We would long for them to do so, but the property market is still in very, very dire condition, and most Chinese families' property accounts for about 80% of their net asset value. And so if that's coming down by 40 or 50%, or has already come down 40 or 50%, you're not feeling very rich or very, very extravagant. And so it's been a very tough market. But it has to be said, the valuations are pretty attractive at the moment. The question is whether the valuations will be re-rated upwards or not, and that's the big dilemma we're facing at the moment. But certainly the sort of employment numbers coming out at the moment, the consumer sentiment numbers, do not give one great encouragement. And the Chinese bond yield has been absolutely crushed, and it's down at 1.6% and staying there just at the moment. Therefore, sort of showing no signs that there's much likelihood of a sort of reflation dynamic going through the economy.
And I can see from the latest fact sheet with the end of June data that India makes up just over 8% of the fund.
Yeah.
What are the reasons behind that? That's an area that we continue to get a lot of.
Yeah, I mean, thanks, Simon. I mean, I'm an unashamed and long-term huge bull of India. I mean, again, very dynamic people, very commercial people, very business-savvy people. Again, you go there, you come back feeling very, very positive indeed. I mean, the long-term opportunities in India are simply outrageous. Everyone always says that the market is far too expensive, and indeed the market PE is about 21, which is far higher than most emerging markets. But I would just sort of say that the long-term opportunities really kind of justify a premium. At the moment, we're really only dealing with the top 10% of the population, about 150 million people who've got enough money to spend. But every year with the economy growing, that increases, and that's why the opportunity, I think, is so exciting. We own Indigo, which is the largest Indian airline. People don't tend to like airlines, but this airline has nearly 400 airplanes. It operates 2,000 flights a day. It's got a 64% share of the Indian airline market, and it's just going gangbusters. And Indian air travel is growing at about 11-12% a year, and again, it's cost competitive with Indian Railways. And so, the growth, we think, is just going to be a multi-year opportunity there. Ditto telephones. We own Bharti Airtel, which is well, it's not quite the dominant, but it's the best mobile telephone operator in India. And again, India is getting wired up with astonishing speed. 5 years ago, 200 million people had a mobile telephone, and now it's 800 million and going up. And data, the need for data and telephones has just become part of everybody's lives, as they have in the West. And again, it's a huge long-term opportunity.
Thank you very much. Thank you, everybody, for watching this update. Please don't hesitate to get in touch with your usual Aubrey representative if you have any questions or we can help with any further information. We'll be delighted to help.